Hey guys, it's Max Convexity. Hope everyone's having a great day. Thanks for joining me. Let's check out these Defiance funds. We'll see how we opened. All right, here's the new short form spreadsheet, 5 minute max. Okay, uh, market's not updating live yet. It's only been open 15 minutes and my quotes are delayed 20 minutes. But in any event, the quotes are delayed on the spreadsheet 20 minutes. We'll look at some live charts here in a second. These are the strike prices the fund sold for today. USOY sold the 76 strike call option on, put option on USO for Friday expiration. The rest of them do the usual thing. They sell a put option for the same day expiration, or I guess it's technically the next day expiration. In any event, this is the total amount of money these guys are going for, and this would be on the day, and this would be the amount of money up or down on the month. And so all three funds are doing great now. This is earnings per share on the month. This is the dividend estimate on the month. That one right there is too high. I don't know why that says that. It's not going to pay that much. I'll work on that, but don't look at that. Don't look at the USO. I don't know where to pick that up from. Anyway, Corey made these spreadsheets where they automatically update. I don't even have to do anything. So nowadays I update something one place and it updates everywhere like it should. And it just has me shocked sometimes. Because anyway, that's, like I said, I did not intend to put that estimate out. Let's look and see what that's picking up. So I made these spreadsheets the same so you'd be able to look at them, and that is the calculation. So I guess that is the current calculation, but I just want to check the math on that. That seems way too high. So anyway, it's only been a few days, and this can vary a lot. We'll keep an eye on it. All right, well, let's look and see how the market opened. We've talked about the spreadsheet enough. All right, here's 24-hour chart of the NASDAQ. So you can see it blew up yesterday and pretty much went straight sideways overnight. Sold off a little bit this morning, but it's pretty much sideways. 24-hour chart of S&P, 24-hour chart of Russell. Russell's the weakest one of the bunch today. Here's a 24-hour chart of oil. Look at oil gapping up. So that's good because we're selling puts. Selling puts is a bullish strategy. Oil gapped up. We'll have most likely a full winner today. So that is great. We sold the 76 strike put. That one where they have right there was for Wednesday. I haven't put Fridays on there yet. All right. Let's see, 76 cents. Sold it for about 66 cents. I'm trying to make it kind of to scale. Okay. All right. So there's the profit box for today. Okay, for USO. So that's the new fund. Let's look at TLT. This is what TRES trades. We don't really talk about that fund that much, but the bonds are blowing up. So I bet TRES is going up lately. I bet it's up today because bonds have had a little tick up in volatility, and that TRES fund kind of tracks bond volatility. Okay, let's look here at the individual yield max names. Let's start with Coinbase like we usually do. Okay, Coinbase is down a little bit today. They're right in the middle of their six strike ladder they're playing for this month. Here's Tesla and Crash. The yellow boxes or strike represent strike prices, and trades represent trades actually for Tesla. The red box, it represents inverse Tesla. There's an inverse Tesla fund out called Crash. Some people are using Crash to hedge Tesla, so I'm just showing the options on the same chart. So if you're a person that has both of those, your ultimate outcome would be for the market to close Friday less than 171 but greater than 166. Then you'd have all the options expire worthless. Okay, here's AMD. Look at AMD gapping up after yesterday. My gosh. Chips are strong, I guess. I bet NVIDIA is doing the same thing. Yes, sir. NVIDIA is doing the same thing. NVIDIA rolled some of their 920 strikes, they still have this lower strike down here at 920. It expires Friday, but they've rolled half of the positions approximately to the 950 into next week. The problem with the 950 is when they rolled it, it was only like barely in the money at all. And sure enough, here we are, 20 minutes into this morning, and the strike's already been blown out. But when you get your strike blown out on a cover call strategy, it means you're at max profit. It's kind of a first world problem, but still option traders don't like to have their strikes blown out. Look at Mr. My gosh. Now that was yesterday's action. Where's today's, right? Has today even opened yet? Or is today right there? Hang on. Okay, yeah, that's today's price right there. Okay, well, they've blown out all their strikes too. We'll see what they do. Like I say, it's a good problem to have, but still a problem you'd rather not have because it creates a management hassle when you're an option trader. Then you have to manage those positions. You have to cover them and roll them or not cover them and worry about them, but you have to do something. So that's why option traders, other things being equal, they prefer to go right to the strike price and just die. And everything expires worthless. All right. I'll be back at lunch. I think it's probably too early to look at the buffer report. We'll check real quick. It's probably too early because Google updates live. It's just been live for 2 minutes. We'll check the buffer report at lunch. All right, guys, let's look at one other thing here. Let's look at the cash NASDAQ. Okay, right in the middle of the profit box. Cash SPX right in the middle. I just wanted to check. Now, Russell was the weakest earlier. No profit box. Gosh darn it. I'll have to fire the guy who's in charge of drawing the profit boxes. He must have forgot to draw that profit box this morning. Well, in any event, it'd be in the middle of its profit box too. You know what we have? We have a handy little sheet called the 5-minute max. We can go check. IWMY, the strike is 21.15, and we got about $10 for it. So let's just do that real quick. 21.15, and we got $10 for it, about $9. We need to go to 21.06. That's the extrinsic part, the part that was out of the money, because the market was presumably there was on the close when they sell this. So the market was there, but so that the amount between where the market was and the break even is the out of the money amount, I should say. So not a whole lot of extrinsic premium, and the rest of it's the in the money amount, and that would be represented by this. All right. Sorry I had to do that live. This went a little bit over. I appreciate you guys' patience. You guys have a good day. I'll be back at lunch.